Did you know that in the last 50 years, there have been more years above our current rates than below? Let that sink in. Like, this is kind of normal. But we do not have a crystal ball, but we do anticipate rates to come back down. And you may have heard, buy now, refi later. So it's like, don't let a higher interest rate scare you so long as you can comfortably afford that monthly payment. And there's a lot of data to support that lower rates are going to be in the future. There are a lot of advantages to purchasing before those drops happen, though. There are still people getting qualified at worst case rates that can still afford the mortgage without major drops in pricing, which is keeping this market moving. And the data actually showed that home prices rose 3.5% since December and 1% in March alone. And that's the highest monthly reading we've had since the peak of June last year. As more activity and record low new listings are pressuring prices even higher. So when we say that there's more room for negotiation right now than when rates drop, it is because there are less buyers that can qualify right now. So there are less people looking for homes. And putting it kind of in a nationwide perspective, if we experience just a 1% drop in rates, that equates to 3 to 5 million more people in the US that will now be able to qualify for a mortgage. And with our increased demand and very little supply, prices and competition are expected to only increase. And we are already seeing that trend right now when we're in the low sixes. Remember, housing is an investment. It is better to be in the market than it is to time it. You will see greater returns being able to park your money in a piece of real estate than trying to time when you think rates are going to be at their lowest. The risk is not only potential equity, but higher prices as more people will be doing the same. So when we look at the data, we expect government intervention to lower rates to mitigate a banking crisis that is looming. And the return on investment on your bonds, it might be a little bit better now, but it's still low, and liquidity is sparse, with a lot of banks. This is just one of the reasons why I think, buy now, refi later is a decent strategy. How much will rates drop? We don't know. But even though it seems scary to purchase right now, the market is literally telling us that. So, love to chat with more about your situation. If you got any questions, feel free to reach out.